hello, everybody who is on for our virtual meeting tonight, Flood Insurance Dare County. We appreciate you taking the time to join us tonight. This is something that I had been trying to pull together for the past couple of years, and it had been canceled for one of our storms that we had, and then last year we had COVID, so we just decided to go ahead and do it as a virtual meeting this evening. My name is Donna Creef, and I'm the planning director for Dare County, for those of you who may be on the line that are not familiar with me. I also have a couple of other of the local planning departments represented tonight. I have Cameron Ray from Kill Devil Hills on the webinar with us. We have Holly White from the town of Nags Head, and we have Wes Haskett from the town of Southern Shores. And so after we do the presentation, we'll be taking some short question and answer period. And if there's any questions about the town of Kill Devil Hills regulations or Nags Head or Southern Shores, they will answer those individual. I'll be handling the ones for unincorporated Dare County. If you have questions about Southern Shore, no, about the town of Duck or the town of Manteo or the town of Kitty Hawk, you will have to follow up with those governments directly, since they are not participating in our webinar tonight. We have two gentlemen with us who work for the SmartVent company, and they're going to talk to us tonight about flood insurance and certain mitigation techniques you can do to save on your flood insurance, which is an important issue to all of us. Mr. Tyler Ardron and Zach Faulkner, and Tyler's going to do the presentation tonight. And a lot of what he's going to be talking about is just basic flood insurance information, how to read an elevation certificate, because an elevation certificate is a very important tool in flood insurance. And if at the end of this you have a copy of your flood insurance and you want to email it to an email address they'll provide to you, they will review that elevation certificate and offer you some suggestions on how to potentially save some money on your flood insurance. So that being said, I'm going to turn off my video and I'm going to let Tyler take it from here, okay?
Cool. Thanks, Donna.
Awesome. All right. Thanks so much, Donna. So thank you for setting this up. Thank you for all the other towns that are with me tonight on this presentation. Like Donna said, we also have Zach Faulkner. Zach is the territorial manager for down in North South Carolina and I believe Georgia. And my name is Tyler Ardron. I am the vice president of our flood insurance company, Risk Reduction Plus Group. So a little bit about the format. Donna kind of touched on it. I'm going to be doing about a 30-minute presentation covering all things related to flood. So the National Flood Insurance Program. I'll touch a little bit about private flood insurance. I know that's a pretty big hot topic. And then also get into mitigation and what you can do to your house to lower your flood insurance premiums. So if you have any questions throughout the presentation, feel free to utilize the Q&A box as well as the chat box. Zach's going to be monitoring that. And then afterwards, we will get to any of those questions. We'll leave about 15 minutes at the end to get to those questions. But I ask that anything that's uniquely specific to your house, that you utilize the email address that I'm about to pop up on the screen here. And we could set a one-to-one call up. Or you can reach out to whatever town you're affiliated with, and the floodplain manager would be happy to assist you with that. So like Donna said, this is for Dare County. Today, is 4/8. And like I said, we're going to uncover the secrets and discover the savings on what you can do mitigation-wise to lower your flood insurance premiums. So let's get started. A little bit about us. We've been in business now over 20 plus years promoting sound floodplain management. All of our staff, including myself, are certified floodplain managers, just like most of the town that's on tonight, as well as I'm a licensed insurance broker. So I'm able to bridge the gap between how to build properly and how that influences your flood insurance premiums. We do outreaches just like this in all states across the country. Last night I did one in New Jersey. I did one in New Mexico not too long ago. I want to say last week, but we're doing them all across the country. And we have an average savings track record of 83%. So we review your flood insurance, and on average, we're able to save you 83%. So that's that free review that I was talking about. Use that email address. It's obx@yourfloodrisk.com. With any unique specific questions, if you want us to review your elevation certificate, feel free to send that over to us, as well as your insurance declaration page. We can make sure you're being properly rated. We can go over mitigation steps exactly needed for your house. Then we can also tell you how much you'll save on your flood insurance if you do the steps that we recommend. So again, that email address is obx@yourfloodrisk.com. That's unique to this area. It'll go right to myself and my staff. And then, like I said, we can answer any of those questions that we don't get to tonight. So
Real
just
quick,
some flooding
sorry,
statistics.
real quick, Tyler, I dropped that in the chat, so everybody should be able to see that email address.
Awesome. So just to get some flood statistics here for you, flooding is the #1 natural disaster in the U.S. And in fact, all 50 states have experienced floods in the past 5 years. It's the riskiest peril out of all the insurance perils. Insurance perils being your fire, your wind, your storm, and then, we have your flood here. But just some other stats for the lower risk zones. With Hurricane Harvey down in Houston, 70% of those losses were outside of flood zones. And in fact, over a yearly basis, 20% of the NFIP claims are in mid to low risk areas. So we have your X zones, your C zones, your B zones, depending on how old the maps are. And unfortunately, 94% of Americans do not have flood insurance. So this is just a disclaimer to anyone that's on here right now that is not in an A or V zone. Even though your mortgage company does not require flood insurance, flooding does not listen to the FEMA flood lines. I mean, they're pretty accurate, but also there is a chance, like you see with these numbers, that even if you're in an X zone, there is a chance that you could flood. And if you are in one of those low risk zones, I highly advise looking into getting a preferred risk policy. You can get that policy for under $500 a year, depending on your coverage. And then another good example I give is most of us, I'm sure on here, has an iPhone or an Android, whatever. And most of us have an insurance policy on our cell phone. This is an $800 item, if not maybe a little more. And you're paying roughly the same amount of money to insure this that you could be paying to insure your house from, again, the riskiest peril that's out there. So that's just my flood disclaimer. Like I said, if you're not in an A or V zone, I advise looking into getting a preferred risk policy. If you are in an A or V zone, I'm guessing you're already paying flood insurance, and that's probably why you're here. But this is something to keep in mind. Some definitions here. We have your base flood elevation level. That's your BFE. What that is it's the calculated level that FEMA estimates your water will rise to during a storm event. And why that's important from the flood insurance standpoint is that's how the rates currently through the National Flood Insurance Program are calculated. They take the lowest rated floor level, compare that to the BFE, and get their elevation difference. So I'll give you an example. If your floor level is at 8, let's just say, and the BFE is at 8, then you're considered a 0, and a 0 roughly pays between $900 to $1,200 a year. And, if you're at a 5 and the BFE is at 10, you're a -5, just for easy number's sake. And a -5 is paying roughly around $5,500 to $6,500 as an actual risk rate. We have your community rating system. That's your CRS program. Some of you may have heard of that. Others you may have not. But what it is where the town will go above and beyond the normal National Flood Insurance Program codes, enforcing higher regulations. But in doing that, gets the town collectively a discount off of their flood insurance. There's a lot of work that's involved. Doing this, the CRS outreach actually gets them points towards that program. That puts them into a class system. And the lower the class that they are, the bigger the discount that all of you on here will receive. And there's a lot more that's involved with that that you don't really see. It's behind the scenes. Donna and the others on here are working on that really on a daily basis. But they're doing it not only to protect your house, but also to get you a discount on your flood insurance. Then we have Freeboard. freeboard's elevating a building's lowest floor above the BFE for a lower premium. New construction, I want to say, and Donna, correct me if I'm wrong, I think you said you guys have a 3-foot freeboard requirement.
Yes, we have a 3-foot freeboard requirement for the A zones, and the V zones, Dare County has a 1-foot freeboard. I know some of the towns have varying freeboards in the VE zone, so you would have to check with them. But generally, the VE zone has a 1-foot freeboard, and we have the 3-foot in the other areas.
Awesome. Yeah, that's all for new construction, meaning that the living floor has to be 3 feet at least above the BFE in that A zone case. But doing it not only protects your house because you're above the water, but it also reduces your flood insurance premium. And again, that's what I'm trying to really point out here is translating from what you're doing to the house and bringing it back to what you're paying at the end of the day on your flood insurance premiums. So your flood zones, anything with an A in front of it typically has an established BFE. And I say typically because older maps have what's called an unnumbered A zone where there's not an established BFE. But anything with an A in front of it typically has low wave impacts and established BFEs. And then we have your V zones, which are more of your beachfront type homes that have established BFEs as well. And they're higher wave impact. We like to call them high velocity zones. But both of these zones, if you have a federally backed mortgage, you're required to have flood insurance. So currently the National Flood Insurance Program is undergoing a reform. So what I want to talk about here is why the NFIP is going under a reform. And then I'll talk about what that reform actually is and what it means to you. But let's first see what the why is. So here on the left, we have the premium generated for each year. In 2005, we know that Hurricane Katrina hit, right? Everybody that had National Flood Insurance Program flood insurance paid into the pot, totaling $1.9 billion. In 2012, that totaled $3.3 billion. Hurricane Harvey that hit in 2017 totaled $3.3 billion. And now on the right, we can see what the claims money was actually paid out. In 2005, over $19 billion was paid out in claims money. 2008, we got $4 billion. 2011, roughly $3 to $4 billion. 2012, $8 billion. 2017, upwards of $10 billion. Needless to say, the National Flood Insurance Program is billions of dollars in debt to the U.S. Treasury. They're running at a deficit, and one of the main reasons why and what they're trying to fix is because they were not assessing their risk properly. And what I mean by that is they allowed previously what's called subsidized rates. A subsidized rate is where you do not have an elevation certificate, and they just give you a rate based off what type of enclosure that you have. So I'll give you an example. If you came to me 10 years ago and you said, hey, Tyler, I want flood insurance. You didn't have an elevation certificate, and you told me you had a crawl space. I would work a quote up, and I'd get around $1,200, I'd say, maybe $1,100 for your premium. And the problem with that is that the National Flood Insurance Program does not know where you're at compared to the BFE level. You could be, worst case scenario, 10 feet below the BFE. Every time it floods, you get upwards of 10 feet of water in your house. Well, that's multiple claims that you're going to be making, and you're only paying $1,100, $1,200 a year. So what they said is we need to phase these subsidized rates out until these people hit their actual risk rate. And the only way to get someone's actual risk rate is with that elevation certificate, because that's the only way to get the elevation difference. So how they did this was they came out in 2012 with the Biggert Waters Act, and in 2014 they came out with the Homeowners Flood Insurance Affordability Act, and all that did was repeal some of the Biggert Waters Act. It lowered the increases a little bit, but what they said is we're going to increase these subsidized premiums 18 to 25% a year until they hit their actual risk rate. And again, the only way to hit their actual risk rate is through an elevation certificate. So if you do not have an elevation certificate, you've seen these increases. Currently, if you came to me and you did not have an elevation certificate and you just bought your house, you're buying your house and you need flood insurance, you can only get a subsidized rate if you're pre-firm. Pre-firm means you were built before the flood insurance rate map. So you're looking at roughly pre-1970s, I'd say, just to be safe. And if you're post-firm, meaning built after a flood insurance rate map, you cannot even get a subsidized rate anymore. You need to have an elevation certificate. But currently, if you were pre-firm, let's just say, and I were to give you a subsidized rate, those rates are starting at $2,100 a year right now. And again, they're going to continue to increase until you get that elevation certificate submitted. Along with that, they added some surcharges. In 2015, they added what's called the HIFA surcharge. For primary homeowners, that's a $25 surcharge that's added onto the policy. And for non-primary homeowners, that's a $250 surcharge that's added onto the policy. There's no way of getting around that. There's no mitigation or nothing that can be changed to get rid of that surcharge. The only thing you can do is, make it your primary residence if it is your primary, and that's the only way to get around that. But no matter what, you have to pay that $25 surcharge for primary homeowners.
Hey, Tyler, real quick, just from my experience doing these outreaches, and especially considering where we're doing this one here for Dare County, and being that there are a lot of people who have vacation homes there, but there are also a lot of people who have their main property here. I guarantee you a lot of the people, of the 54 people that we have on here, that 10 of them probably have this, their insurance agent has this wrong. They've been paying the $250 when it's their primary residence and they should have been paying $25. So if you want to just talk about, where that is on their deck page and that they could quickly look at that and see, if you want to just cover that real quick.
Yeah. I'm actually going to get to that here shortly, Zach, when I go into misratings and everything.
All right, perfect. Okay.
So along with this, every April, the National Flood Insurance Program comes out with new rates. April 1st of this year, 2021, primary pre-firm homes are getting a 7.5% increase. Secondary, severe repetitive loss, substantially improved, and commercial properties are getting a 23 to 25% increase. And post-firm, rated with an elevation certificate, are only getting a 5% increase because those properties are already at their actual risk rate. So again, we're going back to that actual risk rate and why the elevation certificate's critical in getting that. So just a little disclaimer here on repetitive loss and SRL properties, as well as substantial improvements. An RL property is where there's 2 or more claims of more than $1,000 over a 10-year period. An SRL is where there's 4 or more claims of more than $5,000, or 2 or more claims that exceed the total value of the property in a 10-year window. These properties have higher rates, SRL and RL, and you can only go to the NFIP direct to get insurance. You're not allowed to go to a write-your-own carrier. Then we have substantial improvements. What that is any reconstruction, rehabs, or additions, or any form of improvement that where the cost equals or exceeds 50% of the market value of that structure. Then what happens is you have to come up to current code. So I'll give you an example. If this house that I'm looking at is 5 feet below BFE and they're going to flip it, an investor's going to flip it, where they're going to rehab the whole building and get upwards of 50% of the market value, then they're going to have to come up to flood code and potentially, and technically, they're going to have to lift that to the current freeboard requirement, as well as having adequate flood openings. So that's just something to think about as you make improvements and everything on your home. So here we have our flood risk evaluator. And what that is that it's a free service that we offer to our outreach clients, where we review your insurance declaration page, we review your elevation certificate, and over the past 5 years, we've done 5,800 of these reviews, saving people upwards of $11 million nationwide. And about 40% of the cases, we're able to lower their premiums where they get the return on investment in under 3 years. So we recommend doing something to your house. It costs maybe, say, $1,500. You get that $1,500 back in at least 3 years. It could even be shorter. Or it could be simply correcting a paperwork error. So here, I typically ask, who here has been told that flood insurance is the same no matter where you go? And most of the time, at least half the room raises their hand. And that's half true in that technically, if you go to me as an insurance agent, or if you go to any other insurance agent that's out there, the rates should be the same because they're regulated by the government. But it rests on the agent's shoulders to properly rate you. So back to what Zach was saying a few slides ago, you may have on your declaration page, you'll see HIFA surcharge. You may be rated as a secondary residence when you just moved in, say, last year, and now it's your primary residence. Well, now you're paying at least $225 more than you should be. And there could be other things that are involved in that where you're paying more than, again, you actually should be. Some things like that is, like I said, the incorrect residency status. Pre-firm structure not being rated off an elevation certificate. I literally saw today someone who had an elevation certificate. They sent it to me. I looked at their insurance declaration page and saw that they were paying a subsidized rate. I rated them off their elevation certificate. They went from $2,800 down to $1,100 a year for correcting a paperwork error. That's something that they should have been rated off of the past 5 years. So over those 5 years, they were paying $1,000, if not more, than they actually should have been. Some other errors that we see: undocumented flood vents, incorrect building diagram number. So that's where there's a mistake on the elevation certificate. The insurance agent doesn't pick that up because they're pretty difficult to read. And now you're paying more than you should be because there's an error on your EC, but really, your house isn't what reads on that EC. So that's something also that we look at. We look at the EC, we look at pictures of your house, we make sure that they match together, because if, like I said, there's something wrong on that EC, you could be paying a lot more than you actually should be for your actual home.
Hey, Tyler, so if I'm a homeowner and I'm looking at my declaration page, and I see that I'm paying $250 and I should have been paying $25 because it's my primary residence, and I've been doing this for the past 6 years, I tell my insurance agent, or I call you, do I get a refund on that, or am I just out of luck?
Yeah, so technically, you can get a 3-year worth of refunds. The only thing is, if you're not going to an educated insurance agent, they're going to make it tough on you. And I say that because I've done it hundreds of times with people and their insurance agents. A lot of times they don't even know about that rule. And they have to, it's not them issuing the refund. They have to fight for it with the carrier. And then the carrier has to go to the National Flood Insurance Program. So it's like multiple lines that they have to go to. And if the insurance agent, unfortunately, did that wrong, a lot of times they are now educated, to be honest, and it's difficult to get. But it is a law that they have to get it for you. So you need to fight for that, or if not, we can help with that to make sure that you do get them refunds. It will take time, though. I've seen it take 6 months sometimes to get that back. But it is in law that you are required to get that, as long as you can show proof that this was your primary residence over those years. But you are eligible to get a refund to answer your original question. And that's even if something was wrong, if they did something else wrong too. So if the EC was wrong and you were paying, like that example that I just gave you, thousands of dollars for the past, whatever amount of time he was with that person, he can go back and get that refund. It just know that you're going to have to, unfortunately, may argue with that insurance agent because they may not even know this rule. And we can supply documentation showing this and that it is a law that they need to get this for you. But, again, you are technically able to get a refund back on that. So what we do is we create a report. Using the elevation certificate, we make a report like this, where we point out any flood zone mistakes. We put your information, the building address, what you should be paying currently for your flood insurance. And again, a lot of times, this may be cheaper than what you're already paying now. And then at the bottom, we put exactly what steps you need to take to lower your flood insurance. And if you do these steps that we recommend, we show what you're going to go down to. So in this case, adding additional venting brings them from $5,600 a year down to $946 a year. That's a $4,600 savings year one. And then we put down how much your savings are over a 5, 10, 20-year period so that you can get a true return on investment. You can look, all right, the vents are going to cost me $2,000 to do. I'm going to do it because I'm going to make my money back in that first year. And that's something that we can help provide for you. So 3 solutions. What are the 3 solutions that I look for when reviewing someone's home to reduce their flood insurance? Number 1, mitigating to compliance. So lowering the risk of your home, doing something to your home to lower your flood insurance premium. Number 2, correctly rating. We just talked about that on the last slide. Maybe there's an error on your current policy. Fixing that lowers your flood insurance like that. And then number 3, this is the last choice, but it is an option if there's no other options out there, and that's private flood insurance. And I'm going to talk about that here at the end of this presentation. So reducing flood risk through mitigation. With floodwater comes hydrostatic pressure and lateral forces. What happens is the water builds up and can push on your foundation wall. And this is showing you also why basements are a lot more riskier than at-grade spaces, because they're not only getting the above ground lateral force, but they're also getting the soil movement and hydrostatic pressure underground. So how do we fix that? Well, we do that by allowing the water to pass through, equalizing the pressure on both sides. And this is a great visual to show you why you're letting water through. Because I talk to homeowners every day, and a lot of times if they've not heard of this, they're like, why am I going to let water pass through? And I'll be honest, when I first started 9 years ago now, I was like, what the heck are you talking about? But this visual right here is the exact reason why, because you're equalizing the pressure on both sides of your foundation wall. And this is an image showing you if you do not equalize it, that water is going to build up and it's going to find its way through your foundation. And again, this is showing you what could happen if you do not have adequate openings.
Right. And to be clear, we're talking about on enclosed areas that are below your first livable floor. So when you build in the flood zone, your first livable or finished floor has to be above that base flood elevation line, which is where FEMA says the water might get to if you have one of these bad flood events. So in any enclosed area below that, a garage, a full height enclosure, a crawl space, you have to have flood openings there to let that water equalize, like Tyler was just talking about.
Yep. Yeah. And thanks for adding that, Zach, because we probably will get a lot of questions after that with people, I have a slab on grade. Can I put vents in? You cannot wet flood proof a finished area. It has to be an unfinished area. cannot be subgrade. It has to be an at-grade space. So an example would be a crawl space. And another example would be a diagram 7, full height enclosure, where you have a garage, underneath your first living floor. That's what you're allowed to wet floodproof. Unfinished areas below the first living floor, not including subgrade spaces like basements. So moving on to a case study here. Here we have Ocean City, New Jersey. This was a home that was built up on a crawl space. And here I'm going to show you a visual, basically painting out what the elevation certificate is laying out for us. So the top of bottom floor, which is in section C, on this house was at 7.1. And the base flood elevation level was at 9. So this house was considered a -2 because they were 2 feet below the base flood elevation level. And what we want to do is rate them off their next higher floor level. Their next higher floor level on the elevation certificate is listed in section C, letter B, was at 10. And that's 1 foot higher than the BFE. And that's where we want to rate them. So we want to go from a -2 to a +1. And you'll see what that does to this person's insurance. So they had vents. They had what's called non-engineered vents. Air vents, they were broken in the open position. They have to be considered compliant, but they were higher than 12 inches. Flood openings can be no more than 12 inches directly below the vent, and they have to be on at least 2 different walls. In this case, they were higher, so they were not even considered compliant. They did not count towards anything in regards to their flood insurance. And you could see that in section A of your elevation certificate, where you would see section A, you'll see the square footage of your crawl space or enclosure space, and directly below that, you'll see the amount of square inches for openings. And what you want is to have that number bigger than the top number, because you want to have at least enough coverage, if not more, to protect the enclosure area. And in doing that, you'll get the savings off of your flood insurance. So some stats on the house. It was a pre-firm home built in 1952. Remember, pre-firm means it was built before a flood insurance rate map. It was in an AE zone. It was a building diagram 8, which means it was a crawl space. The BFE was 9, and she was paying roughly $3,000 a year for her flood insurance. And again, that was because she was a -2. We recommended installing proper flood openings into her crawl space. She had a very large crawl space, so she needed a lot of vents, and it cost her $3,500 to do this, but she went from $3,000 a year down to $547. That was an 82% reduction, and now the best part of this is that is her actual risk rate. We did this back in 2014. She's still a client of ours, and she's still paying in the $500 for her flood insurance. So she's incurred savings after savings after savings, and she also protected her building from potential foundation collapses like that image that I showed earlier.
Yeah, if I can real quick, Tyler, something we talk about a lot in this presentation is the money that you're going to save on your flood insurance by doing these certain mitigation options. But it's also important to note that equally as important as you saving the money is that you're making your property safer and more flood resilient in the process. So just wanted to point that out as well.
Yeah, for sure. So, if a claim happens, exactly like Zach said, you're protecting your house, and that's why you're paying a lower flood insurance premium, right? It's lower risk, and that's what insurance is at the end of the day. To translate it to auto insurance, if you have 20 DUIs, you're probably not able to get car insurance, but if you did, it's going to be super expensive. Well, if you're way below the BFE, it's going to be super expensive because FEMA is estimating every time it floods, you're going to get a lot of water in your house and you're going to have a claim. And what we want to do is bring that elevation difference as high as we possibly can, reducing the risk of your home, thus lowering the flood insurance premium. So here's just some other cases that we've been able to help in the past. On the right, you'll see in red what they were paying. On the left in blue, you'll see what it went down to. You'll see the percentage reduction that we were able to help. So moving on to private flood insurance. Private flood insurance does not require an elevation certificate. And the reason why is that they're using a lot more data to determine their risk. They're not using just the elevation difference. They're using historical data. They're using distance to flooding. They're using types of flooding. And then also here on this chart, you can see they're offering a lot more coverages. And the reason why is that they're trying to set themselves apart from the competition. Competition is good in any industry. What it does is it drives prices down, and it also creates more options for homeowners. So, like I said, they're offering different forms of coverages that you can get, loss of use, larger decks that are covered that aren't under the NFIP. And they're also coming in at a 20 to 50% cheaper premium. But you have to qualify for it. They do not qualify everyone. What they're doing basically is going in and saying, all right, we're going to accept this because we don't think it's as risky as these other properties. And in doing that, they have a much smaller risk pool than the NFIP does, and that's why they're able to come in cheaper. Now, there are some negatives with private flood insurance. So will my mortgage accept it? If you have an FHA or VA loan, currently they do not accept private flood insurance. The only loan program that does is a conventional mortgage. That's just a wording issue, though. In the FHA guidelines, it's worded as National Flood Insurance Program flood insurance. It was already sent down to government to be changed last year at the end of the year, and it will be changed this year, I've been told by the Mortgage Brokers Association. Can they pay my claim? So here, these carriers are not backed by the government. They're backed by Lloyd's of London. Lloyd's of London is one of the oldest insurance markets in the world, and it's one of the largest. It's a billion dollar company that offers insurance in many other sectors of the world, whether it's $1 million mansions or whether it's flood insurance. So they're very solvent. We went through claims personally. I've had claims in Irma. I had claims in Harvey. I had claims in New Jersey 2 years ago, 6 figures, and they were paid out. But the negative with private, at renewal, they dropped these people, every single one. Every time I had a claim, they dropped them at renewal and said, we don't want this property anymore. When that happens, you have to go back to the National Flood Insurance Program, and you are no longer eligible for subsidized rate. You have to go right back to your actual risk rate. So if you're a -10, again, that's like super worst case scenario and very rare. But if you're a -10, you're paying maybe whatever, $1,500 with private, you have a claim, they drop you, you have to go back to the government, and your actual risk rate is $11,000 a year for flood insurance, because it's looked at as a lapse of coverage through the National Flood Insurance Program. Also, another negative, you are not eligible for federal grants. If you have private flood insurance, typically after a big storm event, the federal government will start to offer grants for people to help rebuild their homes. You are not eligible for those federal grants because you are through the private industry. You do not have a federal policy. And because of that, you're not eligible for grants. And then another question that I used to get was, it's not affordable. It's actually the opposite. It's cheaper than the government. The thing is, you have to qualify for it. So not everybody's going to qualify. And again, this is a last case, scenario where, all right, we can't mitigate this home. There's nothing more that we can do to their current policy to fix it. Let's check to see if there's any options in the private market. And let's go over the negatives, and let's see if your tolerance wants to accept that and pay that cheaper amount, knowing that you may go back to the government, you may have to, and knowing that you're not going to be eligible for federal grants. So lowering your flood insurance, what steps need to be taken? So step number one, send your documents for review. We can review them, work up a report, and see what we can do to help save you money off your flood insurance. To get started, send in your elevation certificate to that email address, your current flood insurance policy. Maybe all you have is an address. Send that in, and we would be happy to review that for you, see what we can do to help lower your flood insurance, answer any questions that you have. But that's the email address that you're going to use to get those questions answered. But that's the end of my presentation. I want to thank you so much for sitting through it with me and Zach, as well as the town. And let's get some questions answered, Zach.
Yeah, so so anybody who has questions, throw them in the chat, throw them in the Q&A. We have one anonymous attendee who asked a few questions. So she has I have a home with an elevation certificate that is dated 2003. Do these certificates expire? Should they be updated? And how do you get a new elevation certificate is the first question we'll go to.
Okay, so to get in, were you going to answer that, Donna?
No, I was going to let you answer it and see what your answer was. And then if I needed to add anything, I will.
Perfect. All right. You looked up like you're going to talk. All right. Sounds good. So to get a new elevation certificate, you can go to a licensed surveyor. I'm sure the town, whatever town you're associated with, probably has surveyors that they know of that can do this for you. But to go to the next question, technically from an insurance standpoint, I can use an elevation certificate from the 90s. Granted, there's a lot of missing info on it, and there could be something incorrect. And if there is, I'll point that out and may recommend getting a new one. But technically, we can use elevation certificates no matter how old it is to rate your flood insurance premium or your flood insurance policy. And like I said, if it is older or if something looks wrong on it, I may recommend getting a new one. But like I said, technically I can use old as it gets, I can use it.
And just let me add for the folks that are listening, we get calls on a daily basis if to get a copy of elevation certificates. And a lot of times we do have an elevation certificate on file if the house was built probably from 2000 and on. It's a hit or miss thing. The older homes we're not going to have an elevation certificate on, but the flood maps in Dare County have changed twice since 2003. And occasionally FEMA changes the information that's included on an elevation certificate, and the older elevation certificates do not have information on the flood vents, and that's very important information. So if you have an older elevation certificate that doesn't accurately describe the flood vents on your house, then the insurance agent can't accurately rate your house. So it may be in your best interest to contact a local surveyor to get an elevation certificate. So if we have one on file locally at your local government, we will be glad to provide you a copy of it. Under North Carolina law, local surveyors are the only ones that can prepare an elevation certificate, and it's a very technical document. They have to come out to your house and survey your house, so to speak. But I would definitely contact the local government to see if they have one on file. But again, the older the structure, the likelihood that EC is not accurately reflecting your house.
Mm-hmm. All right, cool. Got another question, and I can probably take it. If the property is surveyed, is an elevation typically part of the survey? So it's an elevation certificate. That's the technical term. And a typical survey or like plat is not the same thing as an elevation certificate. An elevation certificate takes, like Donna was kind of alluding to, measurements of where your first livable floor is, measurements of where the dirt underneath the crawl space is, where your mechanicals are, if you have a garage, how many square feet it is, if you have flood openings. There's a lot of different data that's really used for this flood insurance document or your flood insurance premium, that is not part of a typical survey, like a land plat or something like that. So hopefully that answers the question.
You're going to have to tell the surveyor, I need an elevation certificate, or they're not going to prepare it for you. They charge separately for the elevation certificate.
Right. All right. Anybody else have a question? That's it in the Q&A. Let me look down here in the chat.
I think the chat is like kind of crazy. Yeah, there's like a lot.
I was following along in there. Dates for when flood maps first came out are noted in there. For
Donna was answering stuff.
Yep, for the participating communities are in there. I put some notes in there about surcharge being $250 for secondary residents, $25 for primary. Sections A,
that's
A9.
perfect, man.
Yeah,
I'm looking at the chat. Donna's on top of it. Love it.
Yeah.
Normally I'm answering all these.
Yeah. All right, we got another one. We are oceanfront and do not have a mortgage. We have had the same flood insurance for over 20 years. Are you offering insurance or just an evaluation? So
we can do the evaluation. Yeah, we can do the evaluation. Look, so she said she's paying flood, or he said they're paying flood insurance currently.
They have an oceanfront and don't have a mortgage, so they own the property.
They don't have a mortgage.
We have had the same flood insurance, so I assume they pay. Yeah, they have the same flood insurance for over.
They
20
probably
years.
have so you probably have a subsidized rate, is my guess. If you had it that long, I'd have to look at it. But yeah, no, reach out. We can do that evaluation and look through it for you.
So
just send in your address and we can look at it.
Yeah. So to expand and be a little more clear, what we did this presentation on flood mitigation, current state of flood insurance, and we have a complimentary service where any property owner can send us these documents, your elevation certificate and your declaration page, or if you don't have that, just your address. And we'll basically be able to find each and every single possible scenario for you to make your property compliant, more safer, more flood resilient in the process, which in turn then lowers your flood insurance premium, and show you exactly how much your flood insurance premium will reduce by you taking those mitigation steps. And that's what we're here to do. We're partnering with the municipality to offer that complimentary service. And if you decide you want to get flood insurance through us, that's just a bonus. But we're here more as a relationship, with the partnering with the municipality for outreach to make residents aware of, what they can do to make their property safer and lower their flood insurance.
Tyler, there's a question in the chat box there from a Mr. Bill Holt about private insurance, and I'd like to know the answer to that myself. He's asking if a claim is made by one owner under private insurance and it's canceled, can a subsequent new owner of that structure get NFIP and be treated differently?
Yes, yeah, they will be. And the reason, so what happens is if you have the private policy and you need to personally go back to the NFIP, that's a lapse of coverage because you had NFIP coverage in the past. If you're a new owner purchasing a house, that's treated as a loan closing, and now you've never had NFIP insurance in the past. And if you're pre-firm, remember, post-firm can't get subsidized rates at all. If you're pre-firm, you're able to get a subsidized rate. Granted, again, they're starting out at $2,200 a year, depending on the enclosure. If it's a basement, it's even more than that. But if you're a new owner, technically you've never had an NFIP policy and you've never had a lapse. But if it's your current house, that's a lapse of coverage.
Cool. He said great answer.
We've got another question here, and we'll go ahead and answer this, and we'll wind things down. The FEMA lowest first floor lingo is confusing. Can you explain that a bit and what it means? And I'll take a shot at that, and you guys can chime in if you want to. On your elevation certificate, again, it's describing a picture of your house, and the surveyor has 9 different diagram examples that he chooses from that best describes the foundation of your house. Is it a crawl space? Does it have a basement? Does it have a pylon foundation? Is there an enclosure? And I'm simplifying this for you, but so he selects that diagram, and then he goes into section C of the elevation certificate and lists what the ground level is, if you will, of your property. If you have a garage, he's going to list that as the lowest floor. And then your next higher floor is typically your first floor of living area. So when you look at your elevation certificate, it's usually that C2B that is your first floor of living area, but on the elevation certificate, it's typically described as the top of the next higher floor. And, you know, again, if you want to send your elevation certificates in to us or to these guys, we'll be glad to walk you through it. If you're not used to looking at an elevation certificate, it's a whole different set of syntax, and they can be kind of overwhelming. But you really do need to educate yourself on that before you have that conversation with your flood insurance agent, because they may be talking over your head.
Right.
Yeah, just to add to that, Donna. So, and also, you answered perfectly with the top bottom floor. It's very confusing. And like I said before, with misratings, not even insurance agents a lot of times really know what a lot of that means. And the reason why is they're directly typing in what that elevation cert says into their system.
Literally,
the system just says,
literally copying and pasting the numbers and the data on the elevation certificate into a system, and it spits out a number. Half the time they're just copying and pasting. They're not even putting any thought into it, really.
So what I was working with FEMA Region 2. FEMA Region 2 is up here in New Jersey, New York, and Puerto Rico, surprisingly. But what they were saying, I was doing a presentation and I talked about, you know, agent misratings. And what they said was not to shop flood insurance premiums and rates, because it's the same no matter where you go, but shop flood insurance knowledge. So if you go to your agent and say, why am I paying $2,800 a year? And their answer, and I've heard this a lot, their answer is, well, it's because it's through the government and they're expensive. You need to go to somebody else, because there should be a reason why you're paying $2,800 a year, whether it's you're a -3, whether it's a subsidized rate, and that subsidized rate is going to continue to increase until it hits your actual risk rate, which your actual risk rate is this. You know, whatever that is, there's a reason why you're paying that much. And it's not because the government is expensive, because the government's not always expensive. So when you're looking into your flood insurance, shop flood insurance knowledge. Don't think that everybody's an expert just because they're an insurance agent. Question why you're paying what you're paying. And, you know, again, if the answer is, well, that's the government's price, you need to go to somewhere else, and there needs to be a more detailed answer.
Yeah. And Don, if you don't mind, we got one other question I just saw pop up that is a quick answer. We have a brand new house. CO is slated for June 1. We have a elevation certificate designating the property as an X zone. Is flood insurance required? If not, can we get flood insurance? Tyler, that's an easy one, but I'll let you expand on the, yeah.
Oh, lob the last one up to me. Love it. All right. So if you're in an X zone, your mortgage will not require flood insurance. To answer the latter part of that question, you are eligible for flood insurance. It's a plus that you're in an X zone, because you can get a preferred risk policy for very cheap. And now you can protect your house from, again, the riskiest peril of flooding. Homeowners insurance does not cover rising water and flood damage. It's definitely I advise to look into getting a preferred risk policy because it's so cheap. If you break it down throughout the year, you're paying $20 to $50 a month when you break it out like that. Yes, you can get flood insurance. And, no, you're not required to get it, but you should.
Right. And a preferred risk policy is just for primary residents, though, correct, Tyler? If it's a second home that's in an X zone, can they still get a preferred risk? Okay, very good.
Yep. The only difference is that there's that surcharge, unfortunately. So it's not $50 a month. It's like $70 a month because there's the $225 that's added on.
Yeah, and Mr. Holt, I don't think that NFIP acknowledges North Carolina mapping. I'm not sure about that. If you're really curious, that I can follow up with the state of North Carolina on that. Just email me directly and I can follow up with that, Mr. Holt. Is there any more questions in the Q&A, Zach? If not, we'll try to wrap this up here.
Yep. Yeah, I don't see any. And I would say, if you are to end it, if you are on this Zoom, I mean, you live in the Outer Banks, whether you're in an A or a V zone or an X zone, you should have flood insurance.
Yes, and I'm glad that you
Whether
said
you
that,
have to or
Zach, because
not, I mean.
I was going to get that in because I was not going to end this call without that, because we spend a lot of time here in Dare County. We actually have a brochure, and we spend a lot of time. I don't know if you guys can see that. Low risk is not no risk. That's our tagline. We have a lot of properties that are in an X zone, and if you're in Dare County, you need flood insurance. I mean, that's just there's very few properties in Dare County that I would consider safe from flooding. So anyway, I appreciate everyone being involved tonight. Tyler and Zach, you guys did an excellent job on explaining a very complicated topic. And again, if anyone that's been participating on this has any follow-up questions, they can email me. They can email my cohorts in their respective towns if they live in one of the towns that are participating, or you can certainly send in your elevation certificate to Zach and Tyler, and they'll get you one of those free reports back. I encourage you to do that. It's just if nothing else, out of curiosity to see if your elevation certificate is correct. You'd be surprised at the times that they are incorrect. And the other thing I was going to point out, a lot of times the surveyors on that page 2 of the elevation certificate will include comments that the insurance agent doesn't necessarily read, and you want to make sure that your insurance agent reads those comments because they're very accurate and they provide supporting details for what's in Section C sometimes. So that's it. Guys, thanks so much. Thanks to everybody out there that's participated, and you guys enjoy the rest of your evening.
Appreciate it.
Awesome.
Thanks,
Thanks
everybody.
so much, Donna, and thanks everybody for joining.